It seems that a downward correction has begun on Wall Street. The key stock indexes are trading in the red for the third day in a row. The Dow Jones closed 0.4% down yesterday, the Nasdaq lost 0.25% and the S&P shed 0.5% on Thursday. Some analysts reckon these are early signal of the looming correction. The S&P500 has dropped a minor 1% in 3 trading days. It means that investors are still hesitant to sell their shares in the hope that the stock market is capable of extending its growth for a while. As we see, US producer prices climbed 0.7% in August from a month ago. This is slightly higher than expected, but factory inflation eased its pace of growth from July. Nevertheless, producer prices in the US remain at elevated levels. In the early American session yesterday, the equity market rose a bit, but a lot of traders used the situation as an excuse for profit-taking. As the result, the market closed with losses. The technical picture looks like the beginning of a correction. The thing is that large investment funds commonly start buying shares as soon as the S&P 500 declines to a 50-day moving average. On Friday morning, the index has declined another 8 points to reach this level. Losing this 2% of its value, the index will touch a 50-day moving average that coincides with 4,420 points. The S&P is likely to slip to this level in the coming days. Meanwhile, it's trading at near 4,493. On Thursday, the US dollar index weakened to 92.40. The US currency did not find support even from the ECB dovish rhetoric stated at the policy meeting yesterday. Perhaps the fact that the ECB is ready to follow the same path as the US Fed to revise monetary policy is not enough to prop up the US dollar, which has lost its footing. Now the US dollar index is trading in a tight trading range of 92 and 92.70. It's likely to halt in this range until the Fed's policy meeting, which is due on September 22. The USDCAD pair is also trading sideways at around 1.2640 amid a decline in the oil prices. Employment in Canada improved a bit in August. The labor market created almost 90,000 jobs last month, though it's weaker than expected. This data will make an impact on the USDCAD pair. On the grounds of fundamental and technical analysis, experts assume that the currency pair is set to trade in the range of 1.2540 to 1.2660. Bitcoin arouses serious concerns among investors. The number one cryptocurrency has got stuck in a narrow range of around $46,000 for 3 days straight. Investors are not rushing to buy the crypto at low prices. Obviously, Bitcoin lacks any catalyst for its growth. Investors do not have a clear outlook for the crypto market, which frequently defies any forecast. Now, analysts recommend waiting for a breakout of the trading range to identify the direction of a further trend. To sum up, experts agree that the US stock market is on the verge of a downward correction. The closing levels will prove whether this forecast is accurate. The weekly update from the US Labor Department released yesterday was rather optimistic. The number of initial jobless claims fell significantly last week to 310,000 from 345,000 a week ago. Besides, the number of continuing unemployment claims also declined to 2.78 million from 2.8 million in the previous week. Today, the market got to know fresh data on US factory inflation. Perhaps these reports set the stage for further sell-offs. And that's all for today. We keep monitoring the financial market situation. Subscribe to our channel and see you on Monday. We wish you profitable deals and have a nice weekend.